Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 27th of November. I'm Daniel Lam, your host for the podcast. I won a memorable speed chess tournament victory this Monday evening. But what was more notable was that more than one of the arbiters came and spoke to me in between the rounds, because they saw in the news that if Trump were to impose the full 60% tariff on China, the dollar CNH may test the 8 level. And of course, on Tuesday morning, Trump announced that he would impose 10% further tariff on Chinese goods immediately after he takes office. Well, the threat of Trump lifting tariff on imports from China to 60% poses renewed downside risk to the Chinese economy. There are estimates that show this full 60% tariff could reduce China's GDP growth by as much as 2%, as Chinese exports to the US would drop by 65 to 70%. Yes, this is likely to put pressure on the CNH to depreciate against the US dollar. But China also got ways to mitigate risk to its economy and to its currency. If Trump does pursue an aggressive tariff strategy against China, dollar CNH could test the multi-year high near 7.4, as CNH also faces rate differentials that continue to move in the dollar's favor. But we believe this 60% is likely to be a negotiation tactic from the Americans. We also expect China to step up monetary and fiscal stimulus with an additional focus on domestic demand. Now, with such demand offset the decline in exports, well, there's risk that this may fall short, but China also got fiscal means to stimulate the economy. So in short, we do not believe China will pursue a one-off devaluation. Instead, it is more likely that CNH would move in line with other currencies against the US dollar. During the 2018 to 2019 trade war, China's currency depreciation was in the middle of the pack versus a basket of other currencies. Now, as long-term listeners of the podcast would know, I believe that FX is the pillar of all the other asset classes. Thus, tomorrow we shall dig deeper and look at the likely moves in other major currencies, such as Euro and the Japanese yen. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.